What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leveraged semiconductor bullish ETF, which goes by the ticker symbol SOXL. Make sure you hit the subscribe button and the notification bell. That way you're notified whenever we release new videos. We release videos every night throughout the week and once on the weekend, but we release bonus content from time to time, so having that notification button hit will let you know whenever we release that bonus content. Make sure you're following us on X at Bullish Chips. On X, we do give updates throughout the day with real-time entries and exits on scalps and day trades, as well as mid and long-term trades as well. We also provide further commentary, give updates about the QQQ internals, and just other information that might help traders throughout the day. Just a reminder, we're not financial advisors. We don't offer financial advice, but what we do offer is our view of SOXL's price action in the current day, in the past, and where we think price action is going to take us in the future based off of our trading method and our trading charting method. If you're not familiar with our channel, make sure you check out our bonus content after this video. If you want a deeper dive into our trading method, it's pretty simple, very easy to pick up. By the end of this video, you should have a good hang of it. So I suggest that you just hang with us if you're not familiar with it, and by the end of the video, you'll have a good hang of it, and you'll also have very clear entries and exits for tomorrow, as far as calls or puts, or if you're buying or selling shares. The basis of our charting and trading method is based in the strat. Very simple. Once again, only candles can be one of three things: a 1, a 2, or a 3. And there's mainly 6 reversal patterns that we like to play, just because they give a very clear entry and exit. There are continuation patterns that give a very clear entry, but then you just have to use your own judgment on price action as to where your targets would be. So we like these reversal patterns because it actually gives you a very defined entry and exit. So again, it's very easy to pick up. By the end of this video, you should understand it. Along with the numbering of the candles, 1, 2, or 3. There are what are called broadening formations, which are just basically highs to higher highs and lows to lower lows, which give you a good guide as to where there is a high percentage chance that the price action will take you. So again, hang with us through the video if you're not familiar with this, and we'll get you underway. Just a quick rundown of what we'll do today. We'll recap today's price action. We'll do a quick view of the higher time frames, the week, the month, the quarter, and the year. Just a quick view of those. Then we'll set our 4-hour markers and get into our triggers and targets for tomorrow. We'll also review the triggers and targets we have for the week, the month, the quarter, and the year. We're getting close to triggering a weekly strat, so we want to keep in mind what is going on from the higher time frames and not just get zoomed in, worried about the day trades and scalps, because we can do those every day, but you make the good money off of those mid and long-term swings that really allow the price to build up with a high percentage chance to trade. So let's go ahead and get into the charts. That's what everybody is here for. So we'll look at things. Actually, let's pull up the day chart. Turn off extended hours. Just wanted to look at what things were doing during the day. So today, SOXL did have a 3, or what many people call a bearish engulfing candle. So we had price action that went above yesterday's price action, explored above. You can see the wick that formed. Price did not accept up here. Once again, we're running up against this year flip that we've been talking about for 7-8 months, or 7-8 weeks now. With the range that we've been in between 24 and 28, this 28.13 is the year flip. That's what would flip the year green. So if we take a look at the upper left-hand part of our chart, we have our time frame continuity indicators. You can see the day was red, the week was red, the month is green still, the quarter is green still, but the year is red as well. So we've got a conflicting time frame continuity, so that's just going to be reflected in the chart, right? So we do have this sideways action that we've been in for now 8 weeks. We had the look below and fail a couple of weeks ago, where we went below this 24, which was the bottom of the range the previous 6 weeks. So we did the look below, fail. Once you do that, you automatically target the top of the range. So again, we bought calls, rode that to the top of the range, the 28. We did play a little bit more to the upside when we got the look above. It looked like we were going to get the support here where the bullish engulfing candle a few days ago did find support on the year flip. But the next day, we had the push down. Yesterday we had the sideways action, basically making like a a bear flag on the 1 hour, and then today we had the rest of the flush down to this $26 area. Again, remember we've been talking about 2604 for a while. If we bring out our fibs, 2604. Let's get rid of this. We brought that in yesterday. So if we look at we zoom in here, 2604, this dashed line, that is last month's 50% line. We always like to keep a good look at where, the week's 50%, which is up here, which is what our resistance was. Oops, come on, work with me, Thinkorswim. But we can see this purple dash line. This is last week's 50%. This is last week's low down here. This short dashed line. And this solid purple line is last week's high, so we have the 50% right here. We could see yesterday it was resistance. Today it was resistance as well, and we rejected off of that, and we pushed down to last month's 50%, and that's where we caught support, for the day at least. Will we push down tomorrow? Maybe we move sideways tomorrow, and then another day we push down. This yellow line is last quarter's high. This short dashed purple line is last week's low. So do we get the two down on the week and trigger? Let's go back to this week chart because that's one of our favorite reversal strats here. Do we trigger the 1, 2 up, 2 down, right? Because we have a very clear entry on the 1, 2 up last week. If we go 2 down, the entry is at the low of last week. So that's here at this 25.45. And then the magnitude of the 1, 2 up, 2 down is the low of the candle to the left of the 1. So we looked at this candle here, and we see the low of that is the 22.57, which is also the top of the gap on the day perspective. So, do we get the 1, 2 up, 2 down trigger? If it does, we're getting puts. Feel free to sell calls if you want to, but at least looking for the bottom of the range that we've had here before. Do we go to the low of the expanded range that we got with I guess it was 3 weeks ago now, the 2 down, giving us the higher low? Are we going to make a lower low on the week? If we do, it's following a higher high. So we're just creating a new broadening formation, just indicating more sideways action, but we can use the broadening formations to get a measure of high certainty of where the price will go, to give us something to use as a guide for our trades. That's a possibility, but that's kind of what I'm looking for. We've had a pretty good push down. This market has been, buy the dip market. So until we actually trigger that, I'm not entering any puts for anything more than scalps to day trades right now. And today served us well with that. So we've kind of got a look at the zoomed out perspective from the week a little bit already, but we can see we've got this kind of broadening formation here. Where we went high, higher low. So from a trend perspective, we're still in a uptrend, right? But it's starting to flatten out. Do we make this lower low? Again, following a higher high, that's giving us a broadening formation. Let's look at how price acted today on the short time frame. Let's go ahead and bring in our chart with our 4-hour markers, because they did come into play once again, along with last week's 50%. So here we have today's action on the 5-minute. Right, so we've got opening print up here. Let me get the whole day on. There we go. We got opening print right here, right at last week's 50%. Initial push down, bouncing off of the 4-hour trigger to the downside and the overnight low. Not bouncing exactly off of it, but obviously finding support there. So it did initially trigger the 4-hour trigger to the downside. So if we go back to our notes from yesterday, the trigger was a 3-1-2 down, triggering at 27.32 with a magnitude of 27.03. So it did trigger. Now the low here was only 27.19. It didn't make the 27.03, which was just previous low a day. But again, it wasn't a whole lot of magnitude. And again, we were looking for lower highs underneath opening print, which you could consider that one as a lower. I'm sorry, not consider that one as a lower high if you take into account yesterday. That's why we didn't enter initially. Right off of the bat, we went down to the 1 minute, and this is the put we actually got stopped out on at the beginning of the day. Yeah. So we got the lower high here. And if we think back to like last week and the week before, SOXL was doing a lot of its moves either overnight or just initially at the beginning of the day and then moving sideways the rest of the day. So if we're gonna play scalps and day trades, it's a good idea to try and get in early. You don't want to get in too early. I'm not just gonna blindly enter right at open, just buying puts or buying calls just based off of feeling or what I think might happen. I am gonna at least wait for a trigger on it, some type of time frame. So we did wait for the lower high on the 1 minute. We did enter puts here, got the bounce, the support off of the overnight low and the 4-hour trigger, and they hit our stops here, right, which was fine. We lost a little bit of money. It was minimal, barely anything, but we were able to let things form on the higher time frame. So we go back out to the 5 minute. Come on, Thinkorswim. There we go. So we go back out to the 5 minute, and again we got the higher high here, but even though it was following a lower low. If we're looking at Friday's action, right? So this high is higher than this high, and this low is lower than this low. So that gives us a broadening formation. So we know that we're probably going to have a little bit of sideways action. And what we did is took the internals, right? Oh, goodness. That's price action over here. But if we look at the internals, excuse me, very early in the morning, we went underneath the 0 line on vol QD, which is volume inflows or volume outflows as far as like the money is concerned. So money was flowing out of QQQ because vol QD is just for QQQ. ADQD was at 0 line and teetering, right? So initially it actually started out below, and so we did enter puts again, but we kind of broke our rule of waiting for the lower high underneath opening print, just because of where price action was, right? So we got, where did we end? We'd have to look exactly. We got in on, I believe it was right here, off the rejection of overnight high. I don't know if it was one of these two candles or we waited for the break below the opening print, but we were able to get in pretty early on this move down. I think, yeah, we waited till it was underneath the opening print. Wanted to try and stay safe and follow our rules. But we did break them from the standpoint of we didn't wait for a lower high. We just waited for price to get back below opening print because we knew this last week's 50% was such a resistance line, right? This is all yesterday. Resistance, 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 resistance. It had its chance. It went above. It rejected. So as soon as price went below, we got puts. Ended up getting lower highs and lower lows. Once we were in, we knew we wanted to stay in for kind of the longer run, so we went to the 15 minute. Didn't want them to just be scalps, and we got the lower high here on the 15 minute, giving us more confidence to stay in, right? We're below opening print, we're below the overnight low, and it just so happened to be at the week under the week flip, so that flipped the week red, so that gave us the more confidence to stay in. We got down here to this hourly broadening formation and 4-hour broadening formation, this blue and gray line, and we set stops at this. It was support earlier, for a short time, right? So we knew that it would probably retest. We set stops at 50% with 50% of our position. Again, follow us on X and you would see that those were our entries and exits. So we did get stopped out of 50% of our position here. At that point, we did set a target sell down there at this 2604 level, because if we bring that up again, that is last month's 50%. And we ended up having to do some manual intervention, right, because it didn't quite get to the 2604. So up in this 2 up, once it went 2 up, we went ahead and sold, didn't wait for anything else to see if it was going to make a lower high or anything like that. It was close enough to the end of the day. Those were only meant to be day trades, and so that they accomplished what they were supposed to accomplish. We had a great move from, it was right in here, right up under opening print. I would have to go look at our tweets to get the exact time so I could go back and see the exact price that we got in. But it was around 27.50. So we got the move from 27.50 down to 26.15, 26.30 on our our furthest ones down. So pretty good day of profit, especially after giving up a little bit of money in the morning. Again, it was a minimal loss, just because we did use our rules at least, and we waited for the lower high, set our stop at the higher lower high. That way, as soon as it did make a higher high, we were already out. You didn't have to think about it. Didn't have to try and worry about, should I stay in it? Is it gonna, you just wait and reassess things, and then you can re-enter later. So yeah, that was the day. We made some pretty good money to the downside today. Good day, especially after yesterday. Such sideways action yesterday. It was nice to have a nice trending day. We had some other things going on in the background as well, so we weren't able to just be at the charts as much as we wanted to, or as much as we usually are. So it's nice to have a trending day when you have that type of thing going on. So actually, before we move our 4-hour markers, let's go. We looked at the week side of the everything from the week perspective. Let's look at the month. Again, we're still in the soft higher low of this 3. We haven't got a 2 up yet to really lock it in, so this could always still turn back red, and we can continue on down from the month perspective. Would that 3, if it does turn red, do we just get the 2 down, or the failed 2 down for the 3, 2 down, 2 up, back to the upside? That's remained to be seen, but we'll know a little bit more from a month perspective when that happens. The quarter, we're still barely in force with the 2 down, 2 up. Price action is just still barely above the high of last quarter. So, hanging on by a thread to being enforced, but it's still a ways to go before price action would flip the month or the quarter red. Still got 24.38, 23.57. It is the bottom of the range that we've been in for 8 weeks now, like I've been talking about. So, even if it does go red, it could just go red momentarily and then flip back green if we get the bounce off of those levels. Maybe fill this gap, or even fill this gap and bounce off of this longer run weekly uptrend line that we have down here from the bounce back in April 7th. So, hanging on from a quarter perspective, the year, it did trigger the 1, 2 up, 2 down. It almost reached magnitude. It hasn't totally reached magnitude. So, does this remain a threat? Especially with seasonality coming up, tech does not perform well in September, October. So, if they really want to pull the rug, there's gaps to fill to the downside, and maybe we get down to this 621 and complete the 1, 2 up, 2 down strat. Do I think that's going to happen? No, but I'm also not into predicting the future. So if it does, we'll just, we'll be using our triggers and targets, writing puts to the downside, selling calls, just making money to the downside. But, it's a pretty tall order to go back down to where we were in April. Not to say we can't do it, but we've been going for, April to August, going to the upside or sideways and up. So I don't know that we would go all the way back down there. So let's get into our triggers and targets for tomorrow. To do that, we've got to start by moving our 4-hour markers. You can see yesterday's action was so constrained that it was nice to get this bigger price action today. So we'll move the previous low a day to today's low. We'll move the previous high a day to today's high. We'll take the 4-hour trigger to the downside and move it to the low of the second 4-hour candle of today, the second hour of today, the second 4-hour of today. Let's remove this opening print, and we'll move the 4-hour trigger to the upside to the high of the second 4-hour candle of today. So just starting off tomorrow, a trigger to the upside on the 4-hour, it would be a 1, 2 up, making a 3, 1, 2 up reversal, triggering here at this 26.68 with a magnitude of 27.86. So you can see how those reversals give you a very defined entry, very defined exit. That would flip the week back green. The day would obviously be green, and we would be that much closer to the top of the range and trying to flip the day back green as well. So let's go ahead and get in our notes. I've already made this for Wednesday. So today, the notes are from August 19th. That's today. Tomorrow, there'll be 90 trading days left in 2025, and today's closing price was 26.24. The week has flipped red, as we can see. So we've got our marker. The week flips back green at 27.10. The month is green already, so if it were to flip red, it would flip red at 23.57. The quarter is green as well. If it would flip red, it would flip red at 24.38. And again, our year is red, so it would flip green at 28.13. So again, we're kind of close with that 26.24. We just got to get that push up. We can see the market maker's expected move for the week was $2.37. If you're not familiar with the market maker's expected move, make sure to watch our video from this past weekend where I break down not only where to find that information, but how we just put it on the chart. So the $2.37 move from the close on Friday, $2.37 to the upside gave us a high of the expected move for 29.74 and a low of 25 flat. Again, not to say we can't go above or below those numbers, but that's just where there's a high probability that the price action will be. Just like last week, the price action went outside the expected move. There's a 30-40% chance that would happen. So we don't hold those as just it's going to reverse back down at 29.74. We know there may be some price corrected price action there. Maybe a fight over that level between the bears and the bulls, but it's not guaranteed that we're going to stay below that or stay above this 25. It's just something to keep in mind. We do have it out on our charts. We can see the expected move bottom here is this 25 flat. And the expected move top here is 29.74, just above last week's high of 29.66. Okay, so we saw how today's price action respected like overnight low, last week's 50%, the 4-hour trigger to the downside. So we can see how these levels are important to our precision trading. So again, if you want more information about the precision trading that we use with these 4-hour markers, there's also a video in our bonus content that dives deeper into this. So let's just go ahead and get to charting our triggers and targets. So to the downside, this will be a 3-1-2 down. Not much magnitude here, obviously, right? The low of this candle is 26.10, and that's where it would trigger to the downside. So 26.10 is our trigger, and it's going to be a 3, this time a red 3, right? Red 3, red 1, 2 down. Magnitude being the low of this 3, which is 26.10 as well. So really no magnitude at all. So that this magnitude here is going to trigger the day's strat. So we'll go ahead and move that there. We'll get to the day trigger and targets here in a second. We'll go ahead and set some extended targets for the downside. I think we can probably take 26.04 off the board because we basically reached it, right? If we bring these back out. So we've got 25.84 as our next extended target. That's last quarter's high. That's this yellow line right here. And then our further extended target of 25.45, which is last week's low. Right, so those are our extended targets, and we can see if we were to make a lower low on the 4-hour time frame, it would be done at 25.45. That's our extended targets, right? So let's get our triggers and targets to the upside. We had a red 3, red 1. This would be a 3-1-2 up reversal. So we'll have a trigger and a magnitude. The trigger, of course, is the high of the second 4-hour candle of today. That's that 26.68. So 26.68, and the magnitude is going to be the high of this 3. So it's just a classic strat reversal. 3, 1, 2 up. If it goes 2 up, triggering here, target, very precise target up here of 27.86. All right. So we can put some extended targets out here as well. The 28.13, last year's flip, that's been resistance for weeks already. So we'll go ahead and put that up there. 28. Okay, we already got 28.13. We've got our extended targets here. I don't know why that's so weird. There we go. And we don't need too many extended targets on the 4-hour because again, the 4-hour just rolls into the day. The day, depending on where we're at in the week, could roll into the week, which we have a high chance of doing to the downside tomorrow. So let's go ahead and flip our chart to the day. Let's just bring this up. Here we go. So we've got, that's the 4-hour still. the day, we've got a soft lower high right here, right? So need a 2 down to really lock that in as a lower high. So tomorrow, if we go 2 down, we'll get the 3, 2 down, setting up, depending on how the day finishes, we could be setting up a 3, 2 down, 2 up. Again, I like that reversal as well because it gives a very precise entry. It would be the high of tomorrow if we go 2 down, and the exit would be the high of this 3. But we could also go 3, 2 down, 2 down, and go fill this gap or do whatever we need to do. But right now we have the 3, so there's no real reversal strat right off of the 3 that we can put down. So we're only going to have extensions, not reversals on the day perspective. So we can take our magnitudes off. We only have defined triggers, and then we have to use our knowledge of price action to set up our targets, our further targets. Let's go back to the day. So if we go 3, 2 down, it will trigger at the low of this 3, which is 26.10. 26.10? 26.10. Did I mistype the 4 hour and put 27.10? Let's just verify to make sure. Low here, low here. 26.10. I fat fingered it. All right. 26.10. I remember because there was no magnitude there. All right. I copied and pasted the wrong thing. There we go. So let's get our note. Our notes are right. So this will be a red 3, 2 down, triggering at 26.10, and we have our extended targets. We'll bring our 25.84, which again was last quarter's high, and then we've got our let's see, 25.68. Why do we have 25.68? 25.68. Let's bring out our fibs. Just verify we didn't have something there. 25.68. Yeah, I'm not sure why we had the 25.68. I would do the 25.45, which is last week's low. And then we can put, as one more extended target for the day, this expected move to the downside, which is 25 flat. But I won't go any more extended than that. We don't have a lower low on the day until this low down here, which is 22.95. So we have that marked here, 22.95. So we're a long ways from setting a lower low. There's still a good chance of setting a higher low on the day perspective. So we want to keep that in perspective, especially when if we were to get a 3, 2 down, because we could, that 2 down could just be, we poke down here, maybe we find support at last week's low or the expected move at the bottom, and we go up from there. That's just a higher low, continuing the trend to the upside, right? And that would play into a 3, 2 down, 2 up possibility, not tomorrow, but on Thursday. So getting back to our notes here, we have a red 3, and this would be a 2 up. So that would trigger at the high of this 3, so a very defined entry, which is 27.86. And that's the magnitude of the reversal on the 4 hour, right? 27.86. And because it's just a continuation pattern, it's not a reversal. We don't have a magnitude. We've got targets though, and we've got the 28.13, the year flip. I'm going to put that in here first, 28.13, because it's been such a resistance point, right? We'll take these out here. We don't need that many extended. All right, so 28.13, 29.66. Let's bring our. No, that's not what we want. We want this. So 29.66 is last week's high. That's a little extended there. I would use we have a daily broadening here. We've got last month's high here as well at 28.50. I would use the high of this candle, 28.71. 28.71, and then last week's high, 29.66. That gives us something in between there. That's a pretty big move if we were to go all the way up there. So that gives that first extended target is here. Then we've got the extended target here. I don't think we really need to go any further past that, but we do have the 30.55, which, if you're familiar with the channel, if we bring out our major fibs here, the 2020 run up, let's just zoom out real quick from the month perspective so you can see it a little better, right? If we draw Fibonacci from So let's make this a little wider so everybody can see it. From the 2020 low, which was a major point in the stock market's history, from the 2020 low to the all-time high for SOXL, which was the first week of January 2022, we've drawn a Fibonacci sequence, and we can see the 61.8 fib is 30.55, right? And we can see it was, kind of support here, support, a little bit of support on this candle, a little bit of support here, resistance here, a little bit of support here, slight resistance on this month here. So it is a major point of price action. So we could see that as being the really extended target there. But let's take this off, and we'll actually leave this chart up because we do want to look at the week, because the day has the possibility of triggering the week. And once again, the week is in play because has lined up one of my favorite strat reversals, the 1-2 up, possibly the 2 down. If we get price action tomorrow that breaks below the low of last week, which is 25.45, that triggers that 1-2 up, 2 down, and the target is the low of the candle to the left of the one, so this candle here, which is that 22.57, which puts us back at the top of this gap. So that fills the gap from 2 weeks ago, 2 Mondays ago, and makes the possibility of filling this gap and possibly making a lower low on the week perspective. So possibly just making a broadening formation on the week perspective, or just putting in a higher low. Right? We have this daily broadening formation here. Say we do trigger the 1-2 up, 2 down, it can always stop because we are in an uptrend. It can always stop before reaching its magnitude and continue back up, making a higher low on the week and, no, it wouldn't be the day perspective, but on the week perspective, which is stronger than the day. So maybe that's what gives us the energy to bust through the year flip. But we do see we've got some resistance, ahead. We've been in this range. If you want to do short swings, what's worked for us over the past 7 weeks now, 8 weeks, is buying puts at the top of the range with enough time on them, some September monthlies. Even those at this point are getting, I would look more towards October monthlies for these puts, just to make sure you're giving yourself time. Again, we're buying either right at the money or we're buying in the money, preferably in the money, so that we're getting good return for the price action, because it is a $4 range. Now, again, with SOXL, you don't need a lot of movement in the underlying stock price to have a high percentage move, right? We moved $1.29 today. That was a $4.69% move. So $4 is about 16 to 18% of a move for the underlying ETF. So it may take some time to make its way down. If it doesn't, if it shoots down quickly, then you can go ahead and sell here or set stop losses here in case we get the further push down. And then if we do get the confirmation of a reversal, some type of a reversal on the day or even the week, especially if the day has gone lower low. If we get the reversal on the week that's higher than this low, keeping the uptrend intact, then you go ahead and buy calls for a month out or 2 months out if you want to be real safe. And again, at the money, preferably in the money. And that's how you can profit from a range, right? If you've got shares, you can sell calls at the top of the range. This range is tight enough, and we are still in a weekly uptrend that I'm not selling any calls right now. I want to wait till we're in a further in a push upwards, with a reversal on like the week perspective before I'm going to sell again. Just because we're still in this uptrend from the week perspective. So, still in this range. Not a whole lot extra to say. We looked at the chart from the week perspective. Let's look at the numbers, right? So we do have the 1-2 up, 2 down that triggers at 25.45 with the magnitude of 22.57. So a good, almost $3 move there. That's going to give you a good profit on your premium, especially if you're at the money, in the money. We do have the extended targets here if they go further with the gap closes and things of that nature. But we do still have the ability to go 2 up because we're still inside of the week. If tomorrow just goes green or we have some type, so there's some type of announcement that just sends tech soaring tomorrow. Maybe it flips back the week green, and we're still inside, but there's that possibility of again flipping the year green, and at that point you're in full time frame continuity, and then what's to keep you from testing that 61.8 fib, which aligns with the weekly broadening formation, right? So still kind of fighting this monthly downtrend line. We're trying to break through it. If we can just get above this year flip, that would pretty much lock in the fact that we've broken this monthly downtrend line, this green dashed line. Again, check out our bonus content on how we set up our charts if you're not familiar with the color coding system that we have here for our broadening formations. And just, we just got to be patient. We're in sideways action right now. So it's all in how you want to play it. If you don't like playing sideways action, you would like to wait till there's a trend again. Like this trend, we had the slight pullback. This trend, we're going through this pullback. Do we get another trend up? If you want to wait for that, just wait. You can be patient. You don't need to make a move every day. We have long-term swings for January 26 and January 27. So, a lot of the day trading that we're doing, especially the puts, is just hedging against those positions. So we're just trying to make sure that we are just hedging, making money in both directions, right? So if we do end up, not going where we think we'll go by, next year, then we'll still have made profit to the downside to make up for that on our long-term swings. So again, I personally would like more of a pullback. It gives us some better entries for the longs if we can confirm, especially on the monthly and the quarterly time frame, that we are going to continue those uptrends, right? The day and the week pullbacks, I like those. I can live for those. You can make some money to the downside. You get better entries for 3-month, 6-month, year-long swings, and it's something we can look forward to. If we do get the 1 2 up 2 down and we break this lower low on the week, now we got to look at this uptrend line down here. Do we get the bigger pullback with the seasonality that we're coming into? Again, September, October, not good performers for tech, so we want to keep that in mind. Don't want to get too far ahead of our skis, right? We don't want to get into predicting the future. We just want to play the price action how it comes to us. So that's the breakdown that I have for you today. Again, here are the triggers and targets. Make sure that you're using these with your own risk profile, and just only entering on trades that you feel comfortable entering. Just because price action goes below some trigger doesn't mean you need to enter. A lot of times, it's good to, once it does break that trigger, look for the lower high or the higher low to confirm that it's going to stay above or below that trigger. So again, use your own risk profile. I just like to give a little bit of a guide. Spread the knowledge of this strat to really help out with precise entries and exits, and then spread the word about SOXL, because this is your one of your best bang for bucks options out there, right? You've got the high beta underlying ETF, you've got high delta to low theta, and your premium is pretty low, so you can load up on contracts and really make some money. So I hope everybody enjoyed today's video. If you did, give it a thumbs up. It really helps the channel spread. Again, we just want to spread the word about SOXL. It's not anything that's new, and it's not something that's not liquid, but I just want to make people more aware of it because of the advantages that it provides, especially in the options market. And the more people that trade it, the more liquid it is. So it's better for everybody. So again, give the channel, give the video a thumbs up. If you're not subscribed, go ahead and make sure you subscribe. Hit the notification bell. That way you're notified whenever we release the videos. And I hope everybody has a good rest of their night. Get some good rest, and I hope everyone has a great day trading.